All right, man. We are on. What's up, Chris?
Not much. How's it going?
Absolutely great. I don't know if I told you, my brother's name is Chris,
Is it?
except I call him Sasquatch. He's
It's a
he's a
little more
big
unique. It's a little more
yeah,
unique.
he's a
Chris.
big old dude. I'm not small. I'm like 6 foot 220-ish, and he
Okay.
just dwarfs me. He's like 6'3", 260 almost. He's just a big old boy. So I call him Sasquatch. He's not very hairy though. It's like a hairless Sasquatch.
Hey man, anything you can do to get a more unique name, I think I'm all for it. My name's Chris Butler, and my first and last name are literally both in the top like 100 most common first names and last names.
Oh,
Like
really?
I can't get a unique username anywhere. There's no username where I could get Chris
Oh,
Butler.
yeah.
I have to, either
Yeah, you
use
could.
numbers or do something that's a little bit more unique and not use my first and last name. So
Yeah, you
uh,
got to be like Chris Butler 99 or
yeah,
whatever.
exactly. I usually like my Instagram was Chris Butler 22. My email, I have an email that just basically has my birthday after. So it's like
Uh-huh. I
there's
totally
no
get it.
I don't get Chris Butler at Gmail.
Is I love that. So also funny caveat on that in the Marine Corps, I was the only Erik Erik Smolinski, except I don't know why, but instead of just giving me Eric.Smolinski at usmc.mil, keep it just my
Mhm.
name, they made it Eric.M, which is my middle initial, dot Smolinski at you. Why we gotta make this so long, man? I already got a long last name.
Just
Now we
in
gotta
case,
add the middle.
just
Yeah,
in
just
case.
why? Um, cool, man. So obviously super stoked to have you on the channel like we were just talking about. I gave you some context on why I'm doing this, just the general background and whatnot. And, anybody who's willing to come on and just, share some time with us is honestly super awesome. I get a tremendous amount of super positive feedback from the folks that frequent my channel, just saying that they're having fun learning and seeing other stuff. So obviously thank you for that. I thought obviously a good place to start off would be learning a little bit about you. We didn't dig too far into your background. I know you're from Chicago, moved to Denver. But I would love to, dig in your background a little bit. What got you into investing? When did you start? I think it's a good place to start.
So it's a good question because my freshman year, when I went to college, my initial major was computer science.
Okay.
And that's because when I was in high school, I played a lot of video games and
There
I
you go.
was super into computers. So I thought that I wanted to do something with computers. And I
Hmm.
also have a very technical mind, which it's no surprise that translates into options
Very
because
well.
options there are a lot of moving parts.
Hmm.
But my initial major was computer science and I went to Arizona State.
Okay.
And then
Isn't
about
that a party school?
it is a party school.
Okay.
I did my fair share of partying, but I did not leave ASU because I couldn't handle the partying. I did have some friends, however, that they dropped out of ASU because of the partying.
Okay.
They just couldn't handle it. But after my first year at ASU, I decided to transfer to DePaul, which is in Chicago.
Okay.
And prior to doing that move, I decided that I wanted to change my major to finance.
Got it.
And I can't explain exactly the moment this happened, but it was literally just like a weird moment in my life where I woke up one day and my whole mindset was shifted towards
Hmm.
finance. And I was just like, I need to know how money works. I need to figure out how investing works
Yeah.
because like doesn't matter what kind of money I make in my life. Like if I don't know what to do with it or the things that I can do with it to grow it and preserve it, then I'm going to be screwed.
Yeah.
So I literally had like an overnight moment where I
That's
switched
awesome.
from computer science to finance, transferred to DePaul, and the rest was history. So when I was at DePaul, I got an internship at TastyTrade, which is
Hmm.
a financial network. They talk about options trading and stuff like that.
Got it.
But I was just in email correspondence with the founder, Tom Sosnoff, and I
He
had
made
mentioned,
Thinkorswim, right?
yeah,
Okay.
he's co-founder of Thinkorswim.
Got it.
And the other co-founder that started Thinkorswim with him is at Tastyworks now.
Got it.
So the CEO of Tastyworks, Scott Sheridan, he and Tom were I think, co-founders of Thinkorswim. They
Got it.
definitely both worked there. I'm just not sure if there was another founder,
Okay.
but yeah, so I just was in email with him. I sent him a couple emails. One was about just an options trading question. And then I sent him another email that was asking about internships within the finance/trading industry. I wasn't even necessarily asking for an internship at TastyTrade,
Hmm.
but he just kind of skimmed that email, I think, and then he sent me back another email saying that they had some interns there that were
Huh.
leaving in a couple months. And so he connected me with this other woman that worked at TastyTrade. I
Okay.
sent her my resume, came in for an interview, which was literally just kind of like a meet and greet to see if
Right.
I
Just
would.
personalities
Yeah,
and
exactly.
yeah,
Like the hardest question he asked me, he said, how are your math skills? And I was like, I don't know. I think they're pretty good. Like
decent.
that was the most technical question. I think the interview process is a little harder these days, but I definitely got super lucky with that.
Okay.
But it was just kind of a cold email led into an internship. And I worked at TastyTrade for 3 years from
Hmm.
2013 to 2016. And then after my stint there, I left to start ProjectOption, which the initial goal was to start a website, have a lot of written content, grow the website traffic, and then sell subscription services or courses on that.
Okay.
But then it kind of morphed into a YouTube channel because I knew that it would be easier to get exposure on YouTube as compared to Google search. Because when you think about
Right.
the two, there's when I started, there was already probably hundreds of websites that had
Right.
lots of options trading articles, and it was really hard to compete with them. But when you looked at the YouTube space, there were only really a couple of channels that had lots of viewers. So I thought
Right.
that it would be a much easier time getting exposure on YouTube as compared to just the written content,
Okay.
since there are less people making videos as compared to the blog post type content. So, and that kind of led to where I am today. So today I'm just focused essentially 100% on YouTube.
Okay.
uh, it's funny because when I started the YouTube channel, I saw it as a chore. Like I wanted to focus on the website and the written
Oh,
content,
interesting.
but I knew that the YouTube channel would be a much easier way to get exposure. At least that was
Right.
the theory. And so I
Yeah.
created written or video counterparts to all the blog posts that I was writing.
Okay.
And my OG day one YouTube videos were all just horrible, like voiceover presentations.
Dope.
Like I would just be sitting here with this microphone,
Yep.
and I would make a PowerPoint presentation. I would export the slides as images, and then
Uh-huh.
there would be times where I'd be talking over like the same slide for 2 minutes,
I
and
love
it
it.
would just be like all this text like
Yeah.
sitting static, and then me talking for 2 minutes. Like,
Yep.
which looking back on that, I can't believe I even grew on YouTube with that format, because on YouTube engagement is everything. And so
Yeah.
these days when I make videos, like I'm always trying to have something moving just to keep
Yeah.
the viewer engaged visually.
You must have
But when
really good content though. I mean,
uh,
at the end of the day, if that was making you grow, even with the, the clear overhead, turn on the projector thing that goes,
yeah,
you know.
yeah. So I think, yeah, I think the original growth, or the growth that I experienced over the first couple of years, even with the less engaging video format, I think it
Yeah.
was just about the content on the back end, not
Yeah.
necessarily production quality.
Yeah.
But
I identify honestly a lot with that because I put zero effort into my production quality, and I think everybody knows that. I mean,
mhm,
I tell it to people like this is
it's a
I
lot
do
of
this.
work.
What's that?
It's a lot of work.
Yeah, and for me, like I was telling you, I do not identify as a creative person. So for me to I like to use the whiteboard. I just jot out my thoughts and whatnot, talk through them, and share screenshots. And for me, that's not work. For me, that's just how I mentally process things. But if I were
Mhm.
to do what some of the other channels do, which is really Gucci, like it looks cool, but to me, that's work. I'm not graphically inclined, so that's what I also attribute the very humble growth that my channel has had is
Yeah,
essentially just because the content comes from a good place. And I know that because I'm not
yeah.
selling anything. I couldn't fucking care if you like it or not. It's just there for general consumption. But that's really interesting. I'd love to hear a little bit more about the switch from the focus on your website to YouTube. When did you make that jump?
I think, let's see. So I think 2019 was the first year. This was a literal
Oh,
New
recent.
Year's resolution. I had a business New Year's resolution
That's
coming
awesome.
into 2019. I said, for the entirety of 2019, I'm doing nothing on the website. I'm focusing all of my energy on making my videos better, so higher
Yeah.
production quality. And then
Awesome.
I learned kind of like the post production of doing animations and
Yeah.
text graphics and stuff like that, which the first couple iterations of that were absolutely terrible.
Sure.
Uh,
I bet.
but for 2019, that was the first year, and it was a literal business New Year's resolution
That's dope.
to spend all of my energy and focus on YouTube, because I'm a one-man show.
Right.
And so for me, especially, like I'm so prone to procrastination and being lazy and focused. Like there's no way I could have a podcast, a YouTube channel, write blog
Right.
posts and do all that
Yeah.
at the same time. I just
Yep.
have to focus on one thing. And I think, well, I know. So the reason that I chose to focus on YouTube for that year is because up to that point, YouTube was kind of like the steady growth curve. So
Right.
like whenever I looked at the analytics, it was steadily growing. And
Mm-hmm.
compared to my website analytics, it was kind of choppy. It
A little more
wasn't
sporadic.
it wasn't growing exponentially like
Right.
YouTube was. And so I figured the highest probability bet that I could make would be to focus 100% of my effort on the one thing that I know is growing.
Is growing.
And
Yeah.
if I focus more on that, and especially if I improve the quality of my videos, then I think I could kind of pour gasoline on that growth, so to speak.
Yeah.
So
Yeah.
that's what I did.
That's absolutely awesome. I love that because I also had a blog for a little while that was just, general hobby. And what I realized is I was talking to some of my friends, nobody wanted to sit there and fucking read it. You know what I mean? And one of the things people really enjoy about YouTube is that if they're doing something else and they want to partially pay attention, it's available to them. They can just let it run
Mhm.
and, digest what they hear. And if they want to go back and like really focus on it, I think that's really awesome that you did that and you kind of identified that. Obviously you're really savvy when it comes to identify business opportunities. That's super awesome. When you first started, general question, did it still feel like a chore working on YouTube slash, and I'm asking for me, obviously none of my viewers, they don't care. But I'm
Mhm.
curious personally, like when did it start feeling like fun for you to work on YouTube channel compared to the website?
That's a good question. I can't pinpoint a specific moment,
Got it.
but I think I think just generally after I started YouTube and I started seeing, because the YouTube analytics are absolutely insane, as I'm sure you know.
It's
Uh,
I tell
but
you what, man, I'm
just
I'm too dumb to use it. I like I literally have one of my best
hey, you
friends.
only need to focus on a couple things. YouTube, they kind of guide you and show you what,
Yeah.
like when you log in, watch time's the first thing they show
Yep.
you.
Yep. Yep.
It's all about watch time.
Yeah.
Um, but I think it was after I had maybe a few months experience, probably about a year experience, because in my first 6 months, I think I added maybe 300 to 400 subscribers. And
Got
then
it.
the second 6 months, I added maybe 1,000, 1,500. And
Yeah.
then, so like every interval of time or chunk of time, like going forward, was exponential in terms of growth compared to
Right.
the same amount of time in previous history. So like the
Totally
first
get it.
6 months was 300 subscribers. The next 6 months were 1,000 subscribers or whatever it is, and it just continued to grow exponentially. And
Yeah.
so once I started to see those trends, I think I became much more interested in YouTube.
Got it.
And then I think after I turned on monetization, because I didn't turn on monetization or ads on my videos right when it was available to me. I
Right.
think I actually, because I assumed that the money that was going to be made from my YouTube channel would be so low that it wouldn't even matter.
Right.
And then I was surprised when I turned on monetization. I was like, oh, this is actually like my first paycheck from YouTube was like a couple $100.
Yeah.
So I'm like, well, that's a pretty substantial amount of money, because at the
Sure.
time, my first year when I started Project Option, I made $10,000.
Right.
And the second year was more than that, but it still wasn't a lot of money.
Right. Right.
So $300 in 1 month in my first paycheck from YouTube, like that was a good amount of money.
Yeah, that's decent.
So I was super surprised to see the amount of money that could be made from monetization, and so that also started to get me more and more interested. And
I love that.
just for people who maybe have no idea about YouTube ad revenue and stuff like that, it's very niche dependent. So like if you have a YouTube channel and you are getting like tens of millions of views on all of your videos, then that means you have a very broad audience.
Right.
And basically you're catering to everyone. You just have viral YouTube content that everybody wants to watch. But for advertisers, if you have a really broad audience, then there's not gonna be as much competition to actually target a specific audience, because they can't use your channel to really get to the audience they want.
Right.
But in something like finance, since all the people who are watching options trading videos or investing videos, that's a much more specific audience.
Mm-hmm.
And the lifetime value of acquiring a customer in finance is thousands of dollars.
Right.
And so if you can acquire that customer and make those thousands of dollars, in some case, tens of thousands of dollars over the lifetime of that customer, then you can naturally spend hundreds of dollars to acquire a customer.
Right.
And so since the lifetime value of the customer is higher in finance and investing, then you can pay more to acquire the customer. And so advertising competition and advertising spend is a lot higher in finance as it would be in something that's much more broad where you
Right.
can't really figure out the audience. And so that trickles down to the YouTube creator, because YouTube takes a percentage of what the advertisers pay
Right.
to advertise on your channel, and then you as the creator get the rest. So
Yeah, I mean, that's educational for me. I honestly didn't know a lot of that because I was in the same boat as you where I didn't bother turning on monetization for some time. And then I was talking to somebody about it and they were like, dude, why don't you just turn it on? Because they know I work with the Wounded Warrior Project. No, why don't you just turn it on and donate it? And I was like, I'm not sure. I thought the same thing. It's going to be really low. Who really cares? And then he was just like, dude, think of it this way. It's no sweat off of the viewer's back. Like, it makes no difference. The content you're
right,
providing is still completely free to them. So you're not, you know what I mean? You're not changing that paradigm that
mhm,
I kind of built my channel on. And he's like, and then you just, it's passive, like just donate it. And I was like, yeah, okay. And then I
right,
found the same exact thing as you were talking about. I was surprised um, with the ad revenue. It's actually really cool because I was able to make a donation that was for building a ramp at a dude's house that was in a wheelchair. He literally sent a video to one of the segments of him getting in his house because it had stairs. And he
mhm,
literally would roll the wheelchair backwards until he hit the stairs and like muscle himself up 4 stairs. And he was good at it. But we're like, you know what, we could probably get this dude a ramp. Like, so he doesn't have to play that game. So it's fascinating that background you shared because, like I said, ignorant to all of it, knew nothing. So that's cool,
yeah.
man.
So like all these little things that I was learning about, especially like as they pertain to YouTube, all these
Yeah.
things together, they really pulled me in. And I was like, okay, if I could focus on this, and if I put in the effort, then maybe one day like this could be all I need.
Right.
And I'm happy that I'm able to make a full-time living from YouTube and also the affiliate marketing that I do, which is just essentially connecting people with a brokerage firm.
Got it.
Because now my business model doesn't require anybody that's watching my videos, it doesn't require them to pay me out
Right.
of their pocket for me to make money.
Right.
And so, there's obviously a lot of in the trading and investing industry, it's very predatory
I hate it.
where
Fucking hate it.
these people, they line their pockets
Oh
from
my
other
God.
people who are paying them that just don't know any better.
Yep.
And they sell them on the material things, which, that was like from day one when I started Project Option, I was like, I'm going to take the long road, and I'm not going to succumb to, selling the dream to sell my
Right.
services or whatever, because number one, that's not reality. Like these
Yeah.
people, they're making, I, they could be making that amount of money from their trading accounts, but it's very unlikely that they grew small trading accounts, which is what
Yes.
most of their customers will have, a couple
Yes.
$1,000s, into
Dude.
millions of dollars. That's like very far and few between. But
Yes.
once they have that experience, or they have the proof that they actually did that, however they were successful in doing so, then they can use that to sell a subscription service or a course. And then the money that comes from that can grow their trading account even further. And then
Right.
they have the steady flow of cash flow that they can use to make riskier and riskier bets. And some of those could pay off. But for the average person that is going to start with a couple $1,000s, it's just not it's not a
Yeah.
realistic way to market your stuff. And so my goal with Project Option was to just kind of present things neutrally and give people the information and let them use it however they want to. But I never wanted to use the flashy sales tactics for the purpose of selling things that would line my own pockets.
I
So
love that. It's
so I'm happy that the ad revenues are high enough on YouTube for the options trading space and finance in general,
yeah.
because I can structure a business model around that where I don't have to actually collect payments from the customers
Yeah.
and have them pay out of pocket. So
Yeah, that's awesome, man. It's to be honest, it's one of the things that I do before I invite anybody to chat on my channel. Not like, again, not like I'm offering any sort of significant exposure, but I do know that folks are looking for resources and stuff, and I want nothing to do with any of those kind of channels because it's just misleading, man. It brings people down the wrong path. I literally just started I call it a small stacks portfolio. So I just took 5K, opened up a small portfolio, and I'm essentially trading it, knowing what I know now, as if I was starting all over again.
Mm-hmm.
And what I tell everybody is that this 5K is not going to grow into my nest egg. Like, this 5K is something that I think, if I was starting over again, that I would be wanting to grow modestly, but most importantly, developing a solid strategy that as my income grows and as I continue to save and grow the account, I can continue to apply that same strategy, earning that whatever that percent return is. So it's like that 5K is for developing a strategy and consistency that is not going to grow into your nest egg. And I honestly love that you kind of echo that, because it's so exhausting seeing all the bullshit that people are spreading. And then it's no wonder why, when there's new people to come into investing, they're like, you ask them, hey, what are you targeting this year? They're like, oh, nothing crazy, maybe 80, 100% for the year. And it's like, oh God, like, just you're completely lost. You're so skewed in what you think is realistic.
Yeah, some people email me and they ask me for my opinion on a
Hmm.
service or whatever. Not to name anything, and
Sure.
most of the time, like, I've never heard of it myself. But just the other day, someone asked me. They said, "Well, this service, they said that they can turn $5,000 into $200,000 every year."
Ooh.
I was like, "Well, obviously, like, that's not true, because they may have done it once, but if
Right.
they could do it every single year, then there would be no reason to sell that, because they would be a trillionaire. If you could
Yep.
turn $5,000 into 200K every single year and you could scale that strategy, there would
Yep.
be no reason to be in online sales. You could become a billionaire with that
Right.
turn, you know?
Go buy
So,
Epstein's Island and then just stay there.
yeah, exactly. Um, And then, like, I've had people email me pictures from other newsletters or trade alert services,
Hmm.
where, like, in their introductory newsletter that they're using to kind of try to sell people on it, where they'll say, like, with just $2,000 in a margin account, like, you can make a full-time living trading options. Like,
Psychotic, man.
it's just absolute bullshit.
It's
So
psychotic.
it's unfortunate that that's the space we're in.
I hate it.
But yeah, like, when I started, I knew that not taking that approach to marketing and selling would be a much slower path, but it was just so important to me to not go down that path, just
It's so
because
awesome. It's so awesome,
I
man.
wouldn't be able to live with myself, which is like, there's
Yeah.
different types of people. That
Yep.
there's the person that can do anything and do any type of sales that they want to, as long as it benefits them, and they don't care, like, what that means ethically. And then there's the other type of person that will refuse certain approaches if it's not ethical, you know.
Yeah.
And I'm this type of person. So
Yep.
I always try to be brutally honest, and just my whole goal is just to give people information unbiased and let them do with the information whatever they want. So,
I love that. Yeah. It's honestly, when I looked at a couple of your videos before I asked you, to come on and do this with me. And that's one thing I truly look for, is the people who are, like, genuinely trying to just share information and then let individuals do what they're going to do with it. But
right.
something that has definitely clouded the space is just predatory advertising. You see it all the time, and it sucks because it's so effective. So many people just want that lifestyle so bad that when they see something that it's fishy, but you want it so bad that you want to believe it, and then you find
Right.
yourself going down this really shitty path. Yeah.
Right.
So when you started investing, what was your primary vehicle? Did you start with stock, then go to options, or did you start with
Mhm.
options? What did that look like?
Yeah, so I started and I read a lot of books just on general stock investing. So I
Okay.
read basically all of Peter Lynch's books.
Okay.
He's famed mutual fund manager, and he worked for Fidelity. He had like 30% returns for 15, 20 years, whatever his period of time working there. He has like some of the most historic returns ever for mutual fund managers. So I read all of his books essentially. I read a couple books by Jim Cramer.
Hmm.
I was just absorbing as much information as I could within the stock investing space. And naturally from there, going down rabbit holes on the internet, I found
Right.
options. And I think I found options articles from the Motley Fool. And I was like, these things are interesting. Like, I don't know what this is about, but this sounds
Right.
really appealing. And like, admittedly, the appeal of options that drew me in was that you could use a small amount of money to
There it
make
is.
a lot of money, the leverage,
Leverage.
the
Yep.
leverage. Um, so that really drew me in. And then I started searching for options content on YouTube.
Okay.
And then I found TastyTrade. And then that's kind of what led me to email Tom. And then I had the internship at TastyTrade and then started ProjectOption, obviously. So yeah, I started in stocks, transitioned into options. But
Okay.
at the time, so this must have been in this was probably early 2013.
Okay.
So I was 20 years old. So I didn't have a lot of money to invest at that time. So I was
Right.
basically just learning as much as I could,
Right.
and just absorbing all the content. So
Yeah, that's awesome. I started with stock myself, and then I stumbled across options in a kind of similar way. I started early though. I started trading options in when I was a senior in high school, so 2009. And I was super fortunate in that there was no like internet was still kind of like growing then. Obviously it existed, but it wasn't like story for information as it is now. And I was super fortunate. I came across my mentor. I still talk to him today, but he's a prior Army officer and whatnot. I met him on a Facebook group. But long story short, if it wasn't for that dude to help me get started when I was getting started, I probably would have just, pissed all my money away. So I find your approach very respectable because most people, myself included, want to get started before they're ready to get started. And it
right,
seems like you did a lot of homework, which is honestly, it's just super admirable to hear that because most people are like me and they're impulsive and they want to get started before they're ready. They want to start making money and then they just piss it away because they're not ready. So that's really awesome. Something I'm curious about is if you were to like look at the lifespan of your options trading, how has it evolved from when you started to how you trade now?
that's a great question. So to kind of build on what you just said, while I did do a lot of reading and learning before I ever made an options trade, I probably was reading about options for probably 1 or 2 months before I
Yeah,
even opened up an account and made my first trade. But the most the most you're going to learn is going to come from your direct experience. So it doesn't matter how many YouTube videos you watch, how many books
yep,
you read, how many blog posts you read. You're not going to learn how options work until you actually start trading them with
agreed.
real money, in my opinion. Because I
Yep,
I messed around with paper trading, and I just never found it to be a valuable learning experience because I
interesting.
would I would and it's not true for everybody,
Oh,
but for
sure, yeah,
me, like
I get it.
I would put on an option position in these simulated trading softwares, and I would kind of just forget about them because I didn't have any skin in the game, and
Right,
therefore there was really nothing that was pulling me back to like monitor that position
and
every
truly
single day.
focus on it. Yeah,
And so I didn't really find that it was a valuable learning tool. Although if people use it like a real trade or a real
that's
position and they actually like watch it
yeah,
multiple times a day, check it on every day, and then close it out, I think you can learn a lot from that. But I've always felt that real money trading is the absolute best way to learn. Obviously, with a small amount if you're just getting
yeah.
started. But I
I
think
agree with you.
experience trumps all,
I totally agree with
regardless of
you.
what we're talking about.
Yeah, I totally agree with you. I think for me, I had the same exact perspective on paper trading for a long time that it was kind of useless. And then when I met my mentor, my opinion on paper trading completely changed
Mm,
because he forced me to paper trade for 6 months straight. I couldn't. I mean, I say I couldn't. I could have traded, right? He didn't fucking control my account, but I really respected him and I didn't, I wanted to do, you know what I mean? What my mentor was kind of telling me to do. So anyways, he made me paper trade for 6 months straight and we treated it just like it was my money. Like we would talk about it every single day. We would talk about the moves I wanted to make. I was only allowed to trade the amount of money I was going to, invest with, stuff like that. And I found that to be so beneficial. And it
mhm,
came down exactly to what you said. It's like having the no shit discipline to treat this like real money, to treat this just
mhm,
like your account. And like you said, most folks, it's super hard to do that. I needed somebody to force me to do it in order to take it seriously. So I totally identify with you that for most people, until you put actual money in the game, it's just not the same. And even so, even like with me taking it as seriously as I did, it still isn't the same, exactly like you said. Like, there is no replacement for actually trading. But what I do tell people is that if you're new, I suggest so strongly to start with paper trading, because I truly think that it can help you get a lot of like just the gross fuck ups out of the way early, so that you
Yeah.
don't have to do that with real money. I think that
Yeah.
that's in just a really cool perspective that you're sharing, because it's something I talk a lot about, is, you know, the disposition towards paper trading.
I agree with that. So to answer your question, how the trading evolved,
Yeah.
the early, like the first couple of years that I was trading options, I was very active. So I was
Okay.
probably trading every day or as much as I could.
Hmm.
Uh, and I was experimenting with lots of different strategies, trading all the different strategies.
Right.
I did a lot of naked option selling. So I loved selling strangles
Okay.
early in the day. And that's because when you learn about option decay and positive theta and everything like that, you naturally are gravitated towards selling straddles and selling strangles because you don't have the long options that are reducing your
Right.
option decay. And so early in my options trading career or lifespan, whatever you want to call it,
Sure.
I was doing a lot of naked option selling, and just trading a lot of different strategies, making a lot of predictions and speculations on stock price movements.
Okay.
But I think the most important part of that whole thing is just experimenting with different strategies
Totally agree.
and paying attention to why the positions are changing in terms of P&L every single day. So observations that you make with your positions, I think, are one of the best ways to learn, because you have to ask yourself, all right, the stock is down today and my position is up, or the stock is flat today, my position's P&L has changed by
Right.
X. Why is this happening? And you have to ask yourself the why every single day and after every single movement. And that's how you're going to learn how options work truly in the real world. Um, and so that was the first few years. That's kind of how I approached it.
Okay.
I was not really making money. I would say I was a break-even trader at
Okay.
best, which is still, I think, really good when you're first
Yeah.
starting out. If you can break even your first year, I think that's
I
a
tell
really
everybody
good accomplishment.
I tell everybody be profitable. If it's your first year and you make $1, win.
Yeah.
You come out okay.
Yeah. I may not have been breaking even, but it wasn't, I never had any catastrophic
Right.
losses that completely wiped me out, which I think is very common for beginners, especially if you're getting into the short-term option buying, which is something that
Yep.
a lot of people kind of put out there these days, because
Hmm.
that's the only real way to have a 10,000x return,
Right.
is to buy out of the money options super short term and be right on a big stock price movement.
Yep.
That's the only way to have those home run type returns. And people do hit them, but
Sure.
that's the fastest way to blow up your whole account, because you don't have any margin for error. And those options are not only going to decay very quickly, but if the stock price moves against them, then
Right.
those options will also be
Yeah.
worthless.
I mean, you're
Uh,
just sitting there looking at a lot of gamma risk. So
yeah,
it's
it's
yeah.
as my I'm in a Google chat with my brother and some other people, and we call it vapor risk. So like if you
I like
buy
that.
short-term out of the money options, those are pure vapor. So they'll
Yeah.
just be gone.
Yep. I love that. That's
Uh,
absolutely accurate.
yeah, and so that evolved into basically transitioning from all the strategies to mainly selling directionally neutral trades or doing spread trades directionally. So it's
Okay.
basically just spreads, but it was either neutral or directional.
Got it.
So like iron condors, iron butterflies, or selling put spreads, selling call spreads, buying call spreads, buying put spreads. That's kind of where it went, but the activity was still pretty high. And if we fast forward to probably the past year, I would say that my trading activity from day one, options trading, like starting from when I started learning all the way to today, I think my trading activity has been a steady decreasing curve.
That's
And
awesome.
I think that's because I've realized that the more active I am, the worse I do.
Hmm.
That's because not necessarily just like churning trades, but like you're micromanaging positions. And
Not letting it work.
this actually happened earlier this year in March when the market was so volatile. I got sucked into the volatility and I was started to micromanage again. And
Yeah.
every single day I was making like 10 to 15 trades.
Yeah.
And I felt like I was just kind of digging myself into a hole because I was never letting a prediction play out. I was
Exactly.
just kind of changing my predictions with each day, with each new movement in the market. And I found that to be a very difficult period trading wise. And it was also getting super, super stressful. I started to lose sleep. I was
Oh
waking up,
shit.
I was waking up at 4 a.m,
Oh my God.
checking my phone to see where ES was.
Yeah.
So it wasn't like I had a ton of risk on. That's not why I was losing sleep. It was just because my
Right.
brain had gotten into this pattern of just being hyper obsessed with every little movement in the market.
Yeah.
It was
Just
hard to look
hover.
away because every day the market was up or down
Yep.
100 points, 5%.
Yep.
Um, and so I was able to pare that back and start putting on some directional positions, which after the Federal Reserve came out and came out with all their stimulus, and then we rallied like 10% off the lows, and then we weren't really seeing any negative downturns even after
Yeah.
bad news coming out. Then I kind of figured like, all right, I might as well just not try to fight this
Yep.
because after we started bouncing 5-10% off the lows, I was like, all right, now is the time to start loading up on the shorts again.
Right.
And I burned a lot of money in VXX by
Got it.
purchasing deep out of the money calls in VXX because I
Yep.
thought we are going to have another vol explosion with the obvious incoming market crash,
Yep.
but we never really got that. And then I also learned that typically when you have a shock to the system and you have a really severe stock market crash, the volatility increase is typically the most exaggerated on the initial downturn.
Right.
But then even if you rally back up and then you have another 10% drop, like the second increase in volatility, primarily talking about the VIX,
Yep.
VIX futures, and therefore VXX, that will not be as significant as the first typical meltdown. So
Right.
like the initial shock is typically the most jarring in terms of a volatility increase, at least
Absolutely.
from the information that I came across on the internet, which, you always have to take with a grain of
Just trust
salt.
it blindly,
But
obviously.
it does make sense when you think about it
Yeah.
because like a couple months in, like a month and a half into the new volatility, like people are used to really bad news and people are
Yes.
used to a market decrease. And therefore, the reactions to those movements and the reactions to the news are not going to be as exaggerated as
Yep.
when you go from a 12 VIX and then all of a sudden the market dropped 30% in
Yep.
17 trading days. And now the VIX is at 90. So,
Yeah. I talk about that a lot too. It's, obviously I always like to say markets crash down, not up.
right.
But, once you get through that first move, exactly like you're talking, people have had a chance to digest, synthesize the information. So even if there is a change in circumstance, 2 months down the line or whatever, they've already, hit that initial shock.
Right.
It's funny you bring that up because I truly have felt, and I've said it a million times on, different videos, that this has been like one of the most emotional markets I've ever traded in. Like I
Oh,
said,
yeah.
I started trading really in like 2007, and it's just been mind blowing to me, just how emotional every single thing feels to me. And it's also very fascinating to hear how you handled the rebound compared to how I did, because I absolutely shared your sentiment. I thought with near certainty that there's no way the market could continue up after that initial rebound.
Hmm.
But I didn't start playing it because I felt like the move in the news I was seeing didn't make any sense. So I literally just started scaling out. When the market makes typically those big down moves, I that's when I end up doing very well with the volatility starting to spike as much as it does.
Hmm.
And then as soon as we started getting that rally, I was like, I'll just kind of scale out and see how this plays out. And then it just kept going and going. And I was like, what the fuck, man? Like, what is happening right now?
Yeah,
And
especially the technology stocks. That was
it's just
absurd.
crazy. And I was looking at, just some studies on historical bear markets, and from like 1920 or so, the average recovery is like 298 days or so. So over
Yeah.
200 days, almost 300. And I know that. And then as soon as I started seeing this thing, looking like a V shape, I was like, how? Like, how are we making this move? I just didn't believe it. So
Mhm.
I've been, ever since the drop, I've been very lightly invested. I've scaled in a bit more in different periods of time, but in general, I just don't trust it, man. I just do not
Yeah.
trust where things are. Technology has been doing well, and I think in a lot of ways, this kind of environment bodes well for them. You know, everybody needs technology, and I get that, but there's a lot of other, you know, makeup in the markets, not just technology. So I have I don't know, I have a hard time with that. Being cognizant of our time, I definitely don't want to run over. I really appreciate your time. I want to make sure that we have a few minutes to touch on just your thoughts on how the mind of the trader impacts, you know, their execution, especially in a time like we're seeing right now, you know,
Mm.
when things are so emotional. I'd love to get your thoughts on that.
Yeah, so I think I've personally realized, and I structure my own trading philosophy and approach around psychology because
Yeah.
I'm particularly sensitive to stress and anxiety. And
Hmm.
so if I'm too active in the markets and like it's taking up too much of my mental space, and especially like if I size trades too large or something like that, or I don't really know how I'm going to manage a position, then all those things can start to kind of eat away at me. And so I try to structure my trading strategy so that I don't really have to have those worries.
Yep.
And I think trader psychology is one of those things that it's not a sexy topic to talk about because
Sure.
everybody, it's like if we just sit here talking about trader psychology, people will probably think, well, that doesn't really apply to me because I'm
Always.
mentally strong.
Always.
And while that could be true, when you have your money on the line, and especially once you start to pay attention to the markets very actively, you'll find that the markets can break you down pretty quickly.
Yes.
And I have learned through many of, I think I learned the most about my own trader psychology and trader psychology in general through the big market crashes that we've experienced over the past few years.
Yeah.
Uh, Namely, I started trading options in mid 2013. And
Okay.
2015 was extremely low vol. 2014 was extremely low vol.
Hmm.
And then we get to August 2015, and that's the first time that I ever saw a high volatility market. And that's the first time I ever saw the floor being pulled out from the stock market.
Right.
And so in 2015, I was trading with about $20,000. And from January to August, I went up $10,000. Again, with a lot of naked option selling, I was selling lots of strangles,
Hmm.
uh, but I was having a lot of success with options trading, and I was up 50% on the year. And then August came around, and I lost all of my profits in like 36 hours or something like that.
Sounds
And
right.
that's because the market started to get so volatile that I initially got blown out, not
Hmm.
like blown out in terms of I blew out my whole account,
Sure.
but my short option positions, the strangles, those exploded in value when the market opened on August 24th.
Right.
And I took some big losses on those. But then the futures were moving around $100 a day. So then I was like, if I could just catch one of these movements, then I could make $5,000 because 100 points on
Right.
ES is $5,000. And so I started to get into active futures trading.
Hmm.
And that was like, that pulled me in a very dark place psychologically because you're looking at every single move. And then,
Right.
especially if you like, I had my entries and then I had my stops. And then it would always basically go right to my stop. I'd get stopped out. And then the move would happen and I'd miss out on it.
Yep.
And then you'd start to force entries on things because you're tired of waiting around. So it was just a very undisciplined period. And I started to get really, really active, especially with the futures. And I just noticed that like I just got way, way stressed out and I was in a very dark place. Like it was not just affecting my investing portfolio or
Yeah.
like my investing life. It was like all aspects of life. I got very sour and just
Dude.
I was in a not good place. So I
Yeah.
actually, when I got back to principal, which is my $20,000 or so, I actually took all of that money out of my trading account,
Mm.
and I didn't trade for a month. I didn't even open up my platform for a month
Got
because
it.
I was
Just
like, I
needed a
need
reset.
I need to reset from this
Yeah.
because I can't just go right back in there. Like I'm not in a good place mentally. And
Yeah.
so that was my first big lesson about trader psychology and especially how volatile markets can chew you up and spit you out, to
Yeah.
actually quote my old boss. And I think a lot of people may agree with that, because if you've never experienced a volatile market, and when you start to learn, you start actually trading and getting involved in markets, just trickling higher, it's like, all right, low volatility, the market just kind of grinds up
Right.
over time. There's no real worry. Like, I don't know why people are scared of the declines and the drawdowns. And then it happens, and then you're like, oh shit, like this is how it feels.
Yeah.
And this is what happens in my brain when I start to see so much volatility. And also with volatility, you start to see all these opportunities. And so
Hmm.
you might get sucked into all these trades that you are probably just putting on just because of the volatility. And you're thinking about, if you can catch one of those huge moves for this particular position, like, you're going to be sitting pretty. But
Yeah.
unfortunately, it's not that easy. And
Yep.
volatile markets, I think, are the most dangerous, particularly for new traders, because just what happens psychologically when you're actively involved in the markets, and then everything just starts to get crazy volatile. I
Yep.
think that can really surprise you negatively in
Yeah.
terms of how you react to those environments.
It,
So
especially what I find when there are people who are, starting to think that they understand it and stuff like that. I always talk to folks. My favorite conversation is when folks are selling cash secured puts and they're always just like, oh, I'm okay with assignment. And then
yeah,
all of a sudden the underlying drops and they're like, well, I don't want assignment here. And it's like, it's just
right,
what you're talking about, that
right,
it's what Mike Tyson always said, right? Everybody's got a plan until they get punched in the face. It's the same exact thing. Like, so many
yep,
people feel like they're in a certain mental space and then the shit happens and they're like, oh, okay, I'm in a completely different mental space. Yeah.
right.
I love that conversation. Obviously, we're pretty much at time. So I, I
No,
literally have a
we can
million
keep
questions
going.
for you.
We can keep going.
If,
On that note about psychology, because I kind of want to have an action plan here. But the way I structure my trading these days is I'm typically doing one of three things if I'm trading options at all. So a big idea that I made a video about not long ago was that people see that I have this options trading channel, and I only
mhm,
talk about options on the channel. And so I think that people might have the impression that I only trade options, and that's like all I do in terms of my investing portfolio. But actually, it's a very small percentage. And I think that's important because since you get a lot of leverage with options, you don't need to allocate 100% of whatever you have saved up and in your investment accounts. You don't have to allocate 100% of that money to options. And in fact, I think it's very dangerous. So, for example, like you could use 5% of your portfolio. Let's say you have $50,000. I know that's a lot of money, but I have to kind of size it up here, because unless you have tens of thousands of dollars, like, you can't really size positions with
right.
5%.
Yep.
Like, if you have $3,000, 5% of that is $150. There's
Right.
not many option positions you can put on for $150. And so let's say you have $50,000, 5% of that is $2,500. Let's say you're really, really bullish on some stock, and you want to put on a position that is going to benefit immensely from any increase that you see over the next couple of years. Well, you could take that 2,500 and you could buy a call option with it in, the year out, 2 years out expiration cycle, and you could double or triple or 10x that money depending on the exact stock price increase that you see, but
Hmm.
you can only lose 1x. And so you either are going to lose 5%, which over a 1 year, 2 year period, like, that's not going to kill you. You're not going to be at zero.
Right.
But if your prediction is correct, and you should really only be doing this if you have a strong conviction about something and you want that exposure, but you could double or triple, 4x, whatever it is. And with that small 5% allocation, that could result in an overall account gain that is still huge relative to the risk you took.
Right.
And so I think with the leverage that you can get with options, you don't have to take 100% of what you have, unless, of course, you have just a couple $1,000, in which case it's hard to kind of diversify that into different
Sure.
positions. And stocks are expensive, which is, I think, another reason people are drawn to options, is that buying stocks is really expensive. Like, if you
Hmm.
want to buy a share of Amazon, you got to have $3,000. Whereas you could trade a call spread on Amazon with a few $100s, and you could make a few $100s from that position if you're right.
Yeah.
But I think it's dangerous to forego traditional investing and focus solely on more active approaches. Just because if you think about it, if I'm going to take all of my money, everything I've saved up, and I'm going to allocate it to strictly options trading, and I'm going to do that for the next 10 years. Well, what that means is over the next 10 years, I have to be consistently right about my short-term predictions with what's going to happen in the stock market. Otherwise, I'm going to lose money. And for me personally, getting back to the trader psychology, I don't want to put myself in a position where I have such a high bar to be successful.
Mm-hmm.
I'm not saying that that's going to lead me to not do it at all. I love trading options. Like I'm going to be doing it for the rest of my life, but I don't need to spend, or I don't need to allocate 100% of whatever I'm saving to options, because I know that they are more speculative, because they require, whether you're trading directionally or neutral, doesn't matter, you're still making a prediction. And the success of your strategies depends specifically on the path that the stock price takes
Right.
over that trade duration. And so I don't want to put myself in a position where I'm not going to make any money unless I'm successfully predicting short-term movements in stocks over the next 10 years. Like that,
Right.
when I just think about that, like that seems like a very stressful situation to be in. And so I'd rather hold passive investments and actively purchase more long-term positions that actually represent something over a long period of time. Because I know with a longer holding period, this is statistically been shown to be true too. The longer you hold stocks, the higher the percentage
Mm-hmm.
chance that you have of making money.
Yes.
And in this book that I'm reading, Psychology of Money, I think he said over 20-year periods, there's been 100% chance of making money thus far.
Right.
But basically, like on a 1-day period, it's 50%.
Right.
For 1 year, it's 60. I think he said 68%. 10 years, it's even higher, and then 20 years is 100%. So, like, if I'm putting my money in those types of positions, there's a lot less stress associated with that, because I know it's not on me. I don't have to predict where Tesla is going to go over the next 45 days. If I
Right.
think in 10 years from now, the company is going to be better off than it is now, and it's going to change the world and how we see it, then that's a much easier play to make with a majority of my money. But it doesn't mean that I'm not going to buy some Tesla stock, and then also take a portion of that and do some highly leveraged, highly speculative option positions on
Sure.
Tesla as well. So I think like that gets back to psychology. And for me personally, like I don't want to put myself in a situation where I have such a high bar required just to be successful, which is I think one of the things that happens with people when they get into options is that you see the benefits of it. Like you can make a lot of money with a little bit of money, and you can make money when the stock price doesn't move at all. You can make money when the stock price moves in either direction. And all these things, they seem better than just passively investing.
Mm-hmm.
But I honestly, I think it's a really bad idea to kind of forget about traditional investing, even though there are benefits to be had with options.
I
So
think I would agree with you, and I think for most folks, finding some sort of mix is definitely the right balance. For me personally, my margin account is all options. I trade
right,
all options, and I've done that for over a decade.
right,
And what I found is exactly like you're saying, for most people, it doesn't work well. And I think one of the reasons why it has worked very well for me is because the guy, again, I talk about him all the time, because 80% of what I do is a relic of this dude that's been trading for 60 years. So my mentor, he's retired, and he uses his portfolio for income. So while a lot of people are trading spreads like you're talking about, I avoid spreads at all costs. And most of his trading is covered strangles. So not even like naked strangles, obviously,
right,
but the way that he trades is really identifying with your concept of the longer term game plan. So he trades primarily index ETFs. I
okay,
trade primarily index ETFs as again, just a relic of the way he imprinted on me.
hmm,
And one of the things that he does, and this is exactly what I did in March, is we allocate a certain amount of our account to this trade, then we figure out how much we want to enter. So if I allocate $300,000 to this trade, I'm not going to enter with all 300K at once. I'm going to start with maybe 100K or 150K on the initial
Mhm.
outlay. And then it happened in March. As soon as the market started crashing, I continued to scale into the trade until I hit my cap. And then I just took assignment. And then I exercised that long-term point of view, whereas I trade IWM a lot. So whereas I thought eventually the market will recover, the market will be fine. So I just sat on a shit ton of stock
Mhm.
until the market started to move up, and then I completely unwind. So it's very interesting listening to you talk about your journey through active management, because I think most people touch the keyboard and the mouse too fucking much and they get in their own damn way. For somebody to take assignment and then do nothing is so difficult.
Mhm.
And they like folks don't realize that they want to try to manipulate the trade and do all these other things. Something I'm curious about, and I'd love to just dig into like your journey, because you do a lot of self-analysis. It's very clear. How did you go about like truly getting yourself to slow down in terms of your interactions, with your trades as much, and becoming more comfortable allowing your trade and your initial, assumption to play out?
I think that comes with experience and just understanding that every impulse you have doesn't need to be acted on. And I think that's been a big lesson for me. So,
How did you come
and
to
also
that?
and also I think I kind of got too smart for my own good, where I almost would talk myself out of almost every single trade,
Yeah,
because the initial assumption would be like, oh, XYZ or Apple stock is down today. Therefore, I should sell this put spread because I can make, $300 of easy money. But if it plummets another 20%, then I'm going to lose whatever, 1,000, whatever the number is.
right.
Um, and so you could look at it like, oh, it's a really high probability trade. You have a really high probability of making money. Apple's a crowd favorite, like it's probably going to catch a bid at some point.
Sure.
So you should sell that spread right now because you can.
Right.
Uh, and I think I talked myself out of a lot of impulsive trades like that, because you understand what can go wrong and you understand that there's that specific time frame associated with it as well.
So then
Um,
how do you balance to the other side, right? Like you're saying, you talked yourself out of a lot of trades. How do you get yourself then, to find the good trades to make?
it's a hard question because, as I said earlier, in March, I kind of got sucked back in, and I was doing
Right.
bad things, and I was being too active. Um, but a lot of the activity was kind of trading around stock positions.
Okay.
Um, but I was making a lot of speculative plays as well. Primarily, the number one thing I was doing is I was betting on a market decrease again
Right.
after the initial bounce in March and April, um, and that never happened. So I put too much money into the high reward, low risk plays. So I did a lot of asymmetric bets. So I was basically buying puts in SPY. I had puts in IWM.
Got it.
I had calls in VXX, not necessarily all at once, but these are kind of
Sure.
the positions that I was trading. And the market just kept going up and I kept leading those positions out.
Right.
But I did make a lot of money on the initial decline from VXX call options,
Right.
because I had a lot of stocks in this main portfolio that I'm talking about, and those were taking a hit. And as we started to kind of inch into that decline, and as I started to read more into the coronavirus headlines and kind of understand that this could be something not so great, I started to actually put on long VXX call positions,
Got it.
and those did really well. So they sheltered a lot of the losses from the stock going into the decline. But then as we rebounded back, I started to bet heavily again on another leg lower in the market.
Right.
Those never happened. So
Reasonable
I
assumption
burned a
though,
lot of
right?
money doing that.
Yeah.
Uh, and also just like micromanaging around those positions, like if I bought VXX calls on one day and then the market went up, then I would buy more because VXX would be lower. And therefore I was kind of scaling into that position, and that's how I was justifying it. But
Got
then
it.
maybe as we got a decline, I would kind of sell out too early. So I got way too active with that.
Yeah.
But to answer your question, like how do you select the trades these days? It's a difficult question, but I would say I didn't answer this earlier. I said I basically am doing one of three things if I'm trading. The first is I'm putting on leveraged upside plays, which is primarily long-term call options in specific companies, or it could be an index,
Okay.
like SPY. I had a couple of those positions where I purchased like the 350 calls in SPY for $3, and they had like 2 years, 2.5 years to expiration, and
Got
I
it.
tripled up on those, and I've since closed them.
Yeah.
But those are like the bullish type of plays that I'm doing.
Got
And
it.
in Tesla, I have some pretty deep out of the money call spreads that I actually legged into. So I purchased some calls in Tesla that had 2 years to expiration.
Yep.
Stock shot up on that same day that I entered, and I was actually able to short the same amount of calls at 100 points higher,
Right.
and I collected the same amount of premium. So I essentially legged into a call spread, and my entry price is 0. And since the strike width is 100, um, the max profit on those is $10,000.
Right.
So, but the answer that there's no risk anymore. So if I'm really bullish on a stock long term, then I'll look to these leveraged upside plays.
Yeah.
But other than that, I'm either selling a directionally neutral index butterfly. So I do iron
Yep.
butterfly strategy in SPY or SPX, depends
Okay.
on how I'm sizing it. But that's a directionally neutral play that
Yeah.
basically doesn't have a lot of upside risk. The main risk is a severe decline in the market.
Right.
And that's like a completely systematic strategy. So that really doesn't, I don't lose sleep over that. And
Right.
then the third way I'm trading is if I have an existing stock position, such as one in Tesla, this is an exact example of when I'd use this. If I have a stock position that's increased like absurdly in a short period of time, and therefore the profitability of that position is really high, then I'll actually look to hedge that position by using a put or put spread.
Got it.
And so I did that in Tesla because the cost basis in the main portfolio that is the stock and option mix. The cost basis of Tesla shares is like $210.
Okay.
And the stock price obviously is absurdly high. Like it shot way higher in just a couple months. And so going into the election and with all the uncertainty that's still brewing with coronavirus and everything, I purchased some of the 300 puts. So I purchased 2 of the 300 puts in Tesla.
Got it.
And I bought those for $15. And those expire in, I think, November. And so with that play, the logic was Tesla shares have already seen this meteoric rise. I have a lot of profits on the stock position, but I can use this opportunity to buy these put options that are really cheap now at that strike price because the stock price has gone so high. And since my cost basis is $210 on the shares, and I bought the 300 puts for $15, effectively like the minimum sale price for those Tesla shares through November expiration is $285. So
I love that.
The strike price of 300 minus the cost of the puts is 285.
Yeah.
My entry price in the shares is 211. So if Tesla shares go to 0, I'm guaranteed to be able to sell the share at 285 essentially. It would be the effective sale price since I bought the 300 puts for $15.
Well,
but like
if Tesla goes to 0, I don't think anybody's doing shit. We're probably not gonna be on the computer very much.
Yeah. Well, who knows? You never know. But I think selecting trades is really hard. It's trader specific because everybody has kind of the signals that they look for, their own personal predictions. These days, I'm not trying to make an aggressive amount of predictions, but I do use options when I have a stronger conviction on a particular company, or I just want leveraged exposure. Like let's say I have $125,000 in an account and I'm already invested with $100,000 of it. Then I have 25,000 left over. So maybe instead of buying shares of the company that I'm bullish on long term, instead of spending that larger outlay, maybe I'll spend the same amount or a fraction of that and just turn it into an option play.
Yep.
And therefore I can get exposure to that long-term move, and I don't have to necessarily break the bank in doing it. So I don't necessarily have
Yeah.
to allocate the remaining amount of cash to that one position. By using an option, I can get the leverage, but I still have limited downside if I'm wrong. So
Yeah. I
that's
love,
kind of how I think about it. But how to select trades is such a difficult topic because everybody has their own strategies, everybody has their own stocks that they trade and their own philosophies. I think that's a really difficult question to answer, but I try to be I try not to make as many predictions in the short term as I can. So I try to, if I'm going to make a leverage option play, typically it's going to have an expiration a couple years out. And I think
uh,
I actually love that strategy. It's one
me
of my
too.
favorite strategies.
Me too.
Maybe
Yeah.
not right this second, but I know I'm going to employ that strategy a lot in the future.
Yeah. So something that I've always appreciated my mentor for is whenever I would feel like I having an opinion on where an underlying was going, he would essentially always just call me a fucking idiot. And he
Mhm.
would always say, like, I'm worried about the wrong thing. He's like, stop worrying about where things are going to go. He's like, start worrying about money management. He's like,
Right.
at the end of the day, and he's really imprinted that on me where, like, for most of my trades right now, and I truly mean it, like, I couldn't care less where the underlying goes because I know what I'm going to do if it plummets. I know what I'm going to do if it goes up, and most of my strategies are covered strangles. So a big part of it is just get ready to sit and wait.
Right.
And as long as you're comfortable with that, and it took me a long time to get there. And once your account continues to grow, it becomes easier and easier since you have additional capital to do other things with as you see fit. But
Mhm.
I love that you're talking about the longer term long options. I very rarely buy premium, but I do. And I kind of scold people that, are dead set on only buying or selling. I always feel like it's a pretty ignorant
Mhm.
position. There's a time for both.
Right.
And the way that if I'm buying options, it's typically a leap. And I'll generally employ like some sort of ratio diagonal. So I'll still sell calls against the longs,
Right.
but in contrast to your approach where you'll go out of the money, obviously paying less, I go very far in the money. So I can try to limit theta decay on the position
Right.
and make sure, I'm capturing some intrinsic value, but trade-off is it's more expensive.
Right.
But
Exactly.
it's really cool to hear you talk about leaps because most people who are buying options, they're cheap. You know what I mean? They want to buy it in the next 2 weeks because it's a low dollar amount. But
I've done it too. I'm guilty as well. I'm
yeah,
just yeah. So I guess what you said kind of builds on what I was saying by talking myself out of trades. It's that, like, if I'm going to put on this 30-day option play that requires a specific movement to happen, it could happen over the next 3 months or the next
right,
year. But for me to put money on the line and say with high certainty that's going to happen in the next 30 days,
right.
those types of trades they're much more like gambling. They're
I
much more
totally
speculative
agree.
because I use this term, the path of the stock price. And basically what
Yeah.
I mean by that is literally like the path that the stock price takes over a specific period of time,
Okay.
which option prices and option positions are entirely dependent on the path that the stock price takes.
Yep.
So for example, if you're going to say Netflix is overvalued, it's whatever it is. Let's say it's $525 a share. I don't know where it is right now. And you think that Netflix for sure is going to be below $600 in 30 days or 60 days. So for that reason, you might go out to the 60-day expiration cycle and you might short the 600 call option just by
Hmm.
itself because you're very convinced that Netflix is going to be below 600 in 60 days. And
Right.
with the stock at 525, it's a very high probability play because it has to go up more than $75 by expiration for you to lose money on that. But what a lot of people overlook is even though that is a high probability strategy, you have to keep in mind what the stock path would mean for your strategy. So if the path of the stock was just flat and it traded at 525 through the 60-day period, then you're just going to see steady decay on your 600 short call and you're going to make easy money. But let's say you short that same call, and the other path that happens, or a different path, is the stock goes from 525 and it gaps to 600 the next day. Well, now your assumption on the prior day was, yeah, there's a good chance Netflix is below 600 in the next 60 days, which
Right.
is a high probability event at that moment. And you could collect a few $100s on that option and you think it's free money. But then if the stock price gaps higher in the very short term after you enter that trade, now you have this massive unrealized loss on the
Hmm.
short call. And now you're thinking, well, if it goes to 700, then I'm going to be out a huge amount of money. And
Yep.
so maybe you close that short call because you think that it's not worth the risk anymore. You've already lost a lot. You can't stomach losing anymore.
Right.
And then right after you get out of that call, the stock price maybe goes a little higher, gets to 610, but then it goes back to 575, 550, goes up to 575. And at the expiration date of your call, it's below 600, like you thought initially. But
Right.
since the stock path was not accommodative at all in the initial period, and since you took such huge heat initially, you got shaken out.
Yep.
So I think it's to look at an option position or a particular trade instead of just looking at like, here's the max loss, here's the max profit, like here's the probability of profit. That's all at expiration. You have to think about
Exactly.
what can happen before expiration, which is the stock price path,
Yep.
and what will be your reaction to those movements. And I think thinking about the particular path that a stock price can take, I think it can help you understand the risk and kind of what can go wrong, as opposed to just saying Netflix is at 525. There's a really
Right.
high probability that it's going to be below 600 in 60 days. So I'm going to sell the short.
Yeah.
600 is going to be easy money, which
I
you could be right about your assumption, but what happens in between entry and expiration,
and how do you react?
that can that can be a wild ride, and it can be
Yeah.
something that
I I
traders
honestly
aren't prepared for.
I absolutely love that example. I really do because I also think a lot of people when they're setting up, a higher probability trade, let's just say that was 20 delta, whatever it is. And if you think about a lot of people forget the probability of a touch, which is exactly that. Like there's a pretty good likelihood at some point your option is going to be underwater. And exactly like you said,
Mhm.
even though your entire long-term assumption does in fact play out, that shorter term touch assumption or just calculation also tends to play out. And if you find yourself in that scenario where you're not ready to see your position underwater and then what that actually looks, I love that. I really do, because a lot of people, it seems like they're just so focused on the probability when they enter and then what that looks like at expiration and the money they're going to make.
Mhm.
And they forego kind of the interim. I think that's a really good conversation. The other thing that my mentor talks a lot about is expectancy, because everybody wants to talk about probability of profit. Everybody wants to talk about, the likelihood of different things happening, but that's like, that's half
Yeah.
of the equation that matters
Probability
for
of
you.
profit, it doesn't mean anything.
You exactly. And like everybody wants to obsess over these different metrics. And like, like he always says, he doesn't get it, and I'm always, I question him a lot on it. And he's like, at the end of the day, the likelihood of something matters 50%. The other is, what is your average P&L attached to those likelihoods?
Mhm.
Because like you're saying right there, if you're getting shaken out on a really low paying but high probability trade, typically really poor expectancy, because as soon as you get that move against you, it's going to wipe out 8-10 trades. And
Right.
then, you're kind of sitting there holding that. I find that to be a really uncommon conversation with people because they don't like to think through that in term. It's, I like that. I like that you bring that up
Yeah.
to, oh,
Another example would be, uh, I think talking about stock price paths is a very interesting thing, and this is something that you kind of you'll read about if you read about like more advanced option pricing documents and stuff like that, or you get into the more academic side of things, I should say,
yeah.
and you go like really deep on how these things work.
Hmm.
But the path is like that's everything in options trading is what could happen before expiration.
Right.
And that's kind of where option prices get their prices from. One of the I think it's called the binomial tree
Hmm.
is one of the pricing. So basically it's like here are all the potential paths of the stock
Yep.
through between now and expiration. And if those paths, or each path is successful, here's what the option price will be. And basically it takes all of the different potential paths and then basically takes like a weighted average of
Yep.
the option price values, and that's the option price.
Sheldon talks
So
about
that, I think that's like that's a very crude way of explaining it. And if
it's
there's anybody who is
effective.
much more specific, like with that knowledge, and they understand exactly how that works, then maybe there was some holes in what I just said. But that's
Well, they
like,
could,
there's one that's one way to price an option is like
yeah,
calculate all the potential paths based on a probability, and then you take the probability weighted value of that option at each one of those paths, and then
right.
that's the option price.
Yeah. Yeah.
But as I was going to say earlier, another example would be if you're extremely bullish on a stock and you think it's going to go up. A lot of people are gravitating towards the short-term options, maybe 7 days out, and they'll buy the out-of-the-money call. And let's say you put 10% of your account into that trade, which is obviously a large
A
percentage
bit
for
much, yeah.
short duration. And over the next 7 days, like the stock price kind of trends higher, maybe gets closer to your strike, but it expires out of the money, and therefore you just lost 10%. And then the next week, now the stock price just shot higher, and your initial outlook was completely accurate, except you just had the timing wrong.
The
And
timing is, yeah.
another way to say is that the stock price path over the duration of your trade was not specific enough, and you didn't get that part of it right, and therefore you were right overall, but you were wrong with your trade.
Yeah.
And obviously you'd have to kind of match up your time frame with your outlook, but that's, again, you can still miss out regardless of what time frame you choose. And so that's kind of how I think when I think about the more speculative plays. Because I'll admit, like, if I'm not trading a specific trading plan with the rules all laid out, which is basically the S&P 500 butterfly strategy,
Right.
that's a short-term strategy because the entry is 60 days out. I know exactly how I'm going to size it relative to the account. I know exactly what is going to trigger the trade to be closed, and then I know exactly when I'm going to re-enter the trade. So like, it is speculative still because it still requires the market to accommodate the strategy,
Right.
but every single trade is managed exactly the same.
Right.
The sizing for each trade is exactly the same. And so it's a very easy strategy to follow over a 1 year, 2 year, 3 year period. And if you are going to allocate like a specific amount of your account to an active strategy like that, I think it has to be rules based, just so you can, number one, keep your sanity, but also if you have consistency with how you manage the position, and especially if you've done back testing and you've seen some encouraging results from that, even though it's not the same, that's better than just, choosing 10 different stocks every month, choose your prediction, and then structure all these different types of strategies around your predictions, and they're all differently sized, you're managing them all different. Then at the end of the day, whether you're successful or not, you don't know if it was luck or if it was just from discipline. So
Yeah.
that's kind of like the really long answer. This is still on the how do you choose trades thing, I think. But yeah, so like if it's outside of a predetermined system with rules, then I'm just fully understanding of the fact that I'm speculating, So
Yeah.
that
I,
you just have to accept that.
I talk a lot about like trading plan and strategy outlines for that exact reason, because I always tell people, unless you learn to like identify, monitor, and control variables, one, you can't replicate, and two, you
Right.
can't make adjustments in any sort of calculated manner to see how things go. So the way that I have my personal portfolio broken out is I call them core holdings, which is probably exactly what you would assume it to be. And then I have a speculative portion.
Mm-hmm.
And in the speculative portion, there's a certain set of strategies that I'll apply. And I have strategy outlines for all of them for that
Right.
exact reason, exactly what you're talking about.
Exactly.
Because the shotgun blast leads to whatever results it's going to lead to. And then who knows what it'll be next time.
Right.
Yeah,
I
I
think
think,
that's a great way to learn is to experiment a lot and do
yeah,
a lot of that and be very active. But I think if you really want to use options systematically and you want to, like, a lot of people want to trade options for a living, for income.
hmm
If that's the case, you're not going to do that by just doing all random strategies and coming
right,
up with your own specific predictions each week or each month. It's not going to happen because that requires you to be consistently predicting short-term stock price movements, which nobody can do that consistently. And the shorter
exactly.
term you go, the more uncertain it is, with whatever your prediction is. So if I
Yeah.
say the market's going to go up by, if I say the market's going to go up tomorrow versus the market's going to go up over the next 10 years, there's a big difference between those two statements.
Right.
And the shorter the term, the more it is like gambling, I
Yep.
feel. And if you are really, really active without a plan, I also think that is gambling, because unless you have a very strict plan for each strategy that you're trading and you're sizing them all the same, then you can actually figure out, all right, this strategy, I managed them all the same, I sized them all the same, my results were X. Then you can actually kind of reverse engineer that and kind of
Yeah.
study the performance much more so than if you have 20 different trading strategies you're using, you have 20 different stocks, and you're managing them all different ways and you're sizing them all different ways. It's going to be much
Yeah.
harder to attribute success or failure to one single point. So,
Yeah, yeah, and that's one of the things that I think as people mature as traders, they start to identify the sustainability of what they're doing. It's when I was in college, I used to really enjoy trading forex, and I was like pretty good at it. And then as I, started my career in the Marine Corps, I stopped trading forex, and it was weird to walk away from something I was doing well at. But then when I did the postmortem on it, I realized like the amount of time it was taking me to like adequately research what I felt comfortable doing before I was placing trades. I was like, this isn't sustainable, man. Like, there's no way I want or probably can continue this. And that's, again, when I kind of came across my mentor, I had that conversation with him. He's just like, stop worrying about direction. Start figuring out how to place trades and work around them based on, money management, like I said before. And it's exactly like you're saying. Like, if you're trying to consistently, like, guess short-term returns, you're just leaving it up to chance, pure chance. And that's something that he talks a lot about, and I share on his behalf, where when I was like in the phase where I was aggressively growing my account, I tell people I target at least 15% return per year. Sometimes that will underperform the S&P 500. A lot of other times it will outperform the S&P 500, kind of just depending on where things lie. And what he always taught me is once you're starting to get closer to retirement to draw on this account, he's like, you're out of your mind if you're going to continue using that 15% as your planning variable, like especially when you
right,
depend on your income. So he's like, when
right,
you're doing your planning factor, make sure you have enough money that you can crank that all the way down to 5-6%, somewhere in there, and still get the amount of money you want per month in order to live off of it. And that was just an eye-opening concept,
hmm,
because 15% per year is really good. It's nothing astronomical. Like you said, there's that dude doing 30 for like 15 years, but it's modest and it's something that's attainable. And it was weird to me to hear him kind of even scold that once you're trying to reliably draw on it. So I think it reinforces the point you're making, that you trying to trade in a way that you have to be correct and you need to perform well in order to get what you need to get can be, one, very stressful, and then two, set you up for failure in a pretty big way.
right. You gotta have a plan. If you look at any professional trader, meaning they trade at a trading firm,
Hmm.
they have a trading plan.
Right.
Like 99% of them.
Yep.
There's probably very few traders that you'll talk to that don't have any resemblance of a plan, and they're successful year after year just from their predictions that are coming out of their head.
Yeah.
There has to be some sort of plan as the backbone if you are going to trade very actively, and especially if you're going to put like a serious amount of capital into those strategies.
Yeah. Yeah. Something I, obviously I know that we're well over now. And like I said, I really do respect your time. So thank you. Something I'm really curious about on that same vein though, in your thought process, I get the sensation that some people, when they start trading and they're applying their time, they feel like they deserve a certain return because they're applying that time. I'm sitting in front of the computer all of this time. I should get X return at the end of the year. And
Hmm.
like we've both been talking about, again, like I read a lot of white papers from MIT, University of California, and everything unanimously in terms of those studies says the more you touch the computer, the lower the average return is for those folks.
Right.
So I'm curious what your thoughts are in having those conversations with those people, because that's something I find myself doing a lot, like trying to have a conversation to save people from themselves and essentially letting them know that, you don't deserve shit. And at the end of the day, like the more you touch the computer, the worse off you are. But a lot of people, refute that. Have you had a conversation like that with anybody? I'm curious how you'd approach that dialogue.
I've had people through email correspondence that'll say that they've been emailing me for a while,
Okay.
and they've been learning for probably over a year in some cases, um, and they kind of get discouraged because they feel like, well, they'll say things like, there's so much to this option stuff, like it's really, really a lot, and it's true. And I'm not sure, you're probably familiar with the Dunning-Kruger effect,
Yeah.
which is essentially as soon as you get involved in something new, you feel like you're a genius and you know everything.
Hmm.
And then that's like the peak of the like introduction phase of learning something new. And
Right.
then the more you learn, then it goes back into like negative territory, which is
Yeah.
like, wow, I don't know shit.
I don't know shit. Yeah.
And
Yep.
then as you continue to get more experience, you get closer to that initial baseline where you realize that you know a lot, but
Right.
you're still acknowledging the fact that there's more to know.
Yes.
So I think options trading is a perfect example of that, because as soon as you come out of the gates and you have like your first few months of learning, you feel like you're on top of the world and
Hmm.
you know everything and you're going to be rich. And then months later or a couple of years later, you're continuing to learn. And then you realize, wow, like everything in the past that I thought was a holy grail strategy, it turned
Yeah.
out to not be a holy grail strategy. Turns out that this is very, very difficult. There's a lot to know before you can even get to a playing field where you're not losing money from mistakes or not knowing something.
Right.
You're losing money because you're wrong.
Yes.
And options is one of the most humbling things, because you could know everything there is about options trading, and still that does not guarantee that you're going to make any
Still be
money.
wrong.
And
Yeah.
that's a very difficult thing to swallow for most people.
Yeah.
But it's true. Like just because you know everything about options and how they work, the next step is to actually implement them in scenarios where they profit.
Yeah.
And there's no guarantee that you can do that consistently over time. And
I like
so
that.
that's another reason why I focus most of my savings into passively investing, because I know
Yeah.
that over a long period of time, compound interest can grow whatever I put in now hundreds of times, thousands of times in some cases, depending on whatever you put it into. But I don't want to risk I don't want to risk having to be right about every prediction that I make, knowing that I'm going to be wrong on a lot of predictions.
Right.
And I don't want to structure my financial future around having to be right consistently in the short term over a long period of time. That's just too stressful for me.
Dude, it's
So yeah, like options is the more you know, the better, because you can avoid catastrophic losses through mistakes or just not knowing something.
yeah.
Uh, but there is a certain amount of time you have to put in before you get to a point where you're pretty comfortable that you know like pretty much all there is that you need to know. There's obviously always going to be more to learn.
Yeah.
And like I consider myself to be an expert, but I know that I don't know everything. There's always more to learn. But once you get to that point where like you know everything or as much as you need to know to actually implement these things whenever you see fit, and you know what's going to happen given certain scenarios with this position, it still doesn't guarantee that you're going to make money. And that's a difficult thing to digest, but it's true.
Yeah, I like to talk a lot about it in terms of, like the practical understanding versus the scholastic understanding. So a lot of people can go really far in their scholastic understanding of options or whatever they're doing, but unless you learn how to like practically apply it, it's, just a scholastic understanding. And,
Right.
because things scholastically should work out X, Y, and Z way, it doesn't mean in a practical sense that it's going to. So I think that it's honestly really impressive on your end that you've kind of acknowledged and looked through the way that you trade and said, yes, I'm an options trader, but financially, it literally makes sense for me to have this kind of two-prong approach with passive investments and I seriously respect that so much, because a lot of
Yeah.
people that start options trading, I mean, like I said, I trade pretty much only options. And there's just so many of us that I talk to, they again think that, well, if I just continue to trade, I'll pick it up and I'll start making money. And, for a lot of people, they just are throwing away their future wealth, chasing something that they're just not performing on. So I think that that's really awesome.
And I think the situation you want to avoid, and this is another reason why I buy, I'm buying stocks, I'm buying Bitcoin, yes, I'm a Bitcoiner.
Hmm.
um, but I'm buying these things and investing long term because I don't want to be in a situation where if I was only trading options and in a year the stock market goes up 20% and I happen to lose money trading options, then that's a bad situation to be in
It's horrible. Yeah.
because you don't want to see the market go up 20% when everyone else made 20% and you
Yeah.
lost money because you didn't have any slice of that. And
Yep.
so that's kind of another reason why I'm structuring that way. And I think it's irrational for me to think that I am so smart where my predictions are always going to be true.
Yeah.
And so that's why with the majority of my free savings, I am investing that long term.
Yeah.
But like talking about rational versus irrational, like I think the most rational thing for me to do, or most reasonable thing for me to do, would be to take all of my savings and just put it in a passive index fund and just put all of that money into an index fund and just let it
Right.
sit for whatever the rest of my life and let that grow. But just because I think that is the most rational thing for me to do doesn't mean I'm going to not be irrational with a small portion of my money,
Right.
because I enjoy making predictions. I enjoy trading options, and
Yeah.
I enjoy, learn or implementing the things that I've learned over the past few years. So, like, just because there's like an obvious like rational approach doesn't mean I'm going to actually follow that. And if
Well,
that's just human nature. That's not just with trading. That's with everything. Like, I think everyone can agree the most rational thing for me to do would be to get up every day, and I should probably work out every day, exercise every day, because that's going to be good for me long term. But even though people know that, they don't do that. And so you have to understand that like we're all human and we're going to do things that are irrational, and it's fine.
it's 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 a really fun conversation in kind of hearing that side of things, because I am the dude that wakes up every day and works out because I know I'm supposed to, but I'll also eat. I had pizza last night, which I know I'm not supposed to do. It's
Yeah.
that same thing, right?
Yeah,
Why
I
would
had
I
like
go?
3,000 calories of Chinese food.
Yeah,
I'm glad I ordered orange chicken and General Tso's chicken because I have leftovers that I get to eat
right.
tonight.
And then they get
Now I get to indulge 2 days in a row.
that's beautiful. That's a beautiful thing.
It was only supposed to be a cheat Sunday.
Yeah, but I mean, I would argue that by continuing to trade options, I mean, who knows, man? Like you absolutely can continue developing your approach and just find the next thing that works for you. Because something that my mentor always told me is like when you're retired, you can't draw monthly income via trading stocks, not consistently. So he's like, you have to understand a way to use your capital to be, if you want to draw for income, right? But again, like by continuing to trade options, no matter what, we're still developing a skill set that in the future very likely can be very helpful to us.
Yeah, that's a great point. It's a positive point. I feel like we've talked about a lot of maybe discouraging things today, and I don't want to be discouraging whatsoever. But what you just said is perfect because as I just said to you, that I'm not trading options every single day. I'm not like super active with it, but I do it. But there is there's always value in having knowledge. So there's this quote that my brother said. He said, "Fortune favors the prepared mind." I think
Mhm.
this guy Louis Pasteur said it initially,
Yeah,
and now that's how I close out my newer YouTube videos.
perfect.
Fortune favors the prepared mind. So even though it may not be in your best interest to be trading options like 30 times a day or whatever it is, or using them actively. And just because kind of the odds are stacked against active traders. Like the more active you are,
Yep.
the worse you'll do statistically speaking. It doesn't mean that it's a bad thing to learn something
Yeah.
because, for example, let's say you give up on options. You don't know how options work because they're too complicated, or you hear this conversation and now you're
And they're
discouraged.
like, yeah, fuck that.
um, and then you don't learn about options. And then let's say you have a $1 million stock portfolio
Mhm.
that grows immensely over a multi-decade period. And then there's something that happens in the world where you have this prediction maybe that you want to protect against some very unfortunate outcome with your stock portfolio. So one thing you could do, you could purchase put options in the S&P 500 index, and that would effectively hedge your stock portfolio. And if you understand the way that you could structure that to protect yourself against catastrophic loss, if you're correct about this prediction, but you only give up a small portion of your profits if you're wrong, then if you understand options, you know how to do that exactly. You can structure that trade. But
Right.
if you have no idea how options work, then there's no way you could ever use them in any situation that could benefit you when you could be implementing them with some sort of prediction that you have. And so
Yeah.
I think there's a lot of value in knowledge. I'm a huge bookworm myself. I love learning. I love reading about different perspectives just because I think anything that can broaden your perspective or see something
Right.
from a different angle, I think that is immensely valuable. And so to go along with that, I think there's, excuse me, I think there's a ton of value in understanding active trading, having experience with active trading, knowing how options work, knowing how futures work, how the financial markets work in general. I think understanding all those things, it's never going to be a bad thing to know those things
Sure.
because when the time comes, if you are prepared with this knowledge, then there could be times where you say, I know exactly what I need to do and I need to
Right.
do it tomorrow because I don't need to learn. I already know everything that I need to know for this particular play. And here's what I'm going to do. And I'm going to put this trade on. And that's it. If you don't have the knowledge and never spent the time learning about something, then you're not going to be
You
able
can't
to,
identify that
yeah, you
circumstance.
can't open that door for yourself. So
Yeah.
I think understanding options is hugely valuable and you learn
Sure.
a ton about financial markets, and through the process of learning options you learn about yourself, you learn about the trading kind of psychology, like everything that goes along with trading. And
Yeah.
I think there's a lot of value in all those things, especially if you get to even if it's a thing where you get to a point where you realize, maybe I don't want to be an active trader, maybe I
Right.
do want to be a passive investor. But if you learn those things sooner than later, it's going to be better than learning them later.
And it's based
Because
on, your experience. So
yeah,
it's easier for you to deploy with conviction.
right. Like I'm
Yeah.
so I'm so grateful that I have all the experience that I have because if I didn't have a lot of experience in investing or especially active trading with options, maybe I would just be getting into it today and maybe I have, $100,000 saved up that I saved up over the last 10 years.
Yep.
And now I'm just starting to learn about options with no prior experience or knowledge, but I have more money now and I'm learning with a larger stack of cash. And now I make these mistakes. Let's say I wipe out 10 years of savings because I
Yep.
didn't understand how these things work. And
Yep.
that's not a situation you want to be in. So I think learning learning is learning about these things is going to always be valuable because at the very least you can avoid landmines, and
Agreed.
knowledge and experience is always a good thing no matter what. So
Yeah, yeah. And I mean, I think just like you were saying, exploring different perspectives and, life views and whatnot, it's literally the entire purpose of this entire segment is exactly that. Because I do find a tremendous value in it. And I know when I first started trading options, like most, I was struggling and not doing very well. And then when I was able to like drill down, mentor for like literally force me to write a trading plan, to paper trade, to like take this shit seriously, then for me, I've been just so fortunate with the way that it has changed my trajectory. And it's not from, any sort of pure luck. It's just from like taking the fucking time to like truly sit down and understand these things and how I can apply them. And I think for a lot of people, no matter in what capacity you choose to apply, something like options or whatever, there's just a lot of utility in them, whether you're like me and you trade them exclusively, or like you and you trade them as a component of a larger portfolio. Biggest thing about trading, and I think dovetailing off your psychology comment, man, it's individual to the person, man. Everybody works differently. You have
Right.
an incredible amount of self-awareness. So do I, in the sense that, like, I know I don't know fucking shit. So I just try to do what I know and learn as much as I can. And that's generally my approach. And like, your self-awareness has led you to a place where, you can get sleep now, you're comfortable with what you're doing, stuff like that, because there's so many people. I mean, fuck. I mean, you saw the kid that killed himself because of some shit that wasn't even real.
Right.
You know what I mean? Like,
That's
just,
horrible.
it's just insane. So I totally agree with you that, just taking the time to get the education is super important and helpful.
Yeah. And as a final note on that, I think having experience with active trading and having experience with options, but mostly just like having experience being super active in the markets can make you a much better passive investor as well,
Agreed.
because it can teach you about the impulses that you feel in certain situations, and then it can teach you that the best thing to do is probably nothing. So
Yes.
like with your option positions, you could be swayed to deviate from your trading plan because of some short-term movement, and when in reality you know that you have to follow the trading plan and you shouldn't touch it, right? So
Yeah.
from the traditional investing, long-term investing perspective, if you are buying stocks, let's say you buy this company that you love, and then the next month the stock's down 30%. If you have a lot of market experience and active trading experience, then you'll know that things don't always go according to plan. And
Right.
in fact, more often than not, they don't go according to plan. And
Murphy's Law.
if you're equipped with that mindset, I think it can be very informing, and it can help you make better decisions overall. So
Totally
I
agree.
definitely attribute whatever future success I have with passive investing. I think a large part of that success is going to be attributed to my experiences with more active approaches. So I think having the active approach or having the active experience can make you a better long-term investor and more passively.
It's powerful. Honestly, I truly have never sat down to think of it that way. And that's a really powerful comment. And I literally, as I hear you talking about it, I couldn't agree with the sentiment more. I think that makes a ton of sense. Dude,
Yeah. So
I-
at the end of the day, experience trumps all. That's it.
fact.
Never a bad thing to have knowledge or experience. So
Yeah.
don't let this conversation discourage you if you're an aspiring options trader. We basically we kind of just talked through years and years of experience and kind of the psychological roller coaster that you have over that whole experience too. So hopefully
Yep.
people that are just getting started or maybe just a couple years in, hopefully those people can learn from the things that we talked about today.
Yeah, man. And, like I said, I seriously can't thank you enough for your time. It's super dope talking with you about this stuff. I'd love to do a follow-on session with you at some point.
Yeah, for sure.
There's definitely a lot more that I want to explore with you. But until next time, like I said, thank you so much for your time. Looking forward to chatting with you again.
Yeah, for sure. Thanks for having me.
All right, brother. We'll catch you later.
Sounds good. Have a good rest of your day.
See ya.